Pfizer's current market capitalization is $125.57 billion. However, its enterprise value stands at $172.51 billion, which suggests significant debt on the balance sheet. The company's PE ratio is 15.68, fairly in line with industry averages, but its forward PE is only 7.52, showing high earnings potential in the near future. The price-to-sales ratio is 1.97 and price-to-book is 1.42, both appealing for value investors. The price-to-free cash flow ratio is 12.77 and the PEG ratio is 4.80, which indicates slower growth expectations. The company has 5.67 billion shares outstanding, with only a 0.16% change year over year, indicating minimal buybacks. Institutional investors own 67.31% of the stock, a strong sign of confidence. However, insider ownership is only 0.03%, which sends a neutral signal. The public float is around 5.66 billion shares, meaning liquidity is solid. The next earnings report is scheduled for April 29, 2025. Pfizer's current stock price is $22.14, but over the past year, it has dropped nearly 14%. The 50-day moving average is $25.11, and the 200-day average is $27.20, both higher than the current price, indicating a downward trend. RSI stands at 33.42, putting the stock close to the oversold zone. With a beta of 0.60, Pfizer is considered a low-risk stock, less volatile than the market. Short interest sits at 97.49 million shares, which is 1.72% of shares outstanding. The short ratio is 1.7 days to cover, meaning short sellers aren't overly aggressive. Over the trailing 12 months, Pfizer generated $63.63 billion in revenue. Gross profit was $47.21 billion, reflecting a strong 74% margin. Operating income was $16.33 billion, while net income came in at $8.03 billion. Earnings per share stood at $1.41. EBITDA also came in strong at $23.32 billion. On the balance sheet, Pfizer holds $20.48 billion in cash and equivalents, but total debt is $67.42 billion, leaving net cash at negative $46.94 billion. Book value is $88.5 billion, or $15.56 per share. Working capital is also positive at $7.36 billion, showing short-term liquidity is under control. Operating cash flow is $12.74 billion. Capital expenditures are $2.91 billion, leaving free cash flow at $9.84 billion. That's about $1.73 free cash flow per share. Pfizer's gross margin is 74.19%. Operating margin is 25.66%. Profit margin is 12.62%. EBITDA margin is 36.65%, and free cash flow margin is 15.46%, all strong indicators. The current ratio is 1.17 and the quick ratio is 0.82, showing decent liquidity. Debt-to-equity ratio is 0.76, meaning moderate leverage. Debt to EBITDA is 2.75. And the interest coverage ratio is 5.28, so Pfizer is comfortably covering its interest expenses. Return on equity is 9.06%, return on assets is 4.64%, return on invested capital is 6.37%, and return on capital employed is 9.58%. Asset turnover is 0.29, and inventory turnover is 1.56. Typical for a pharma company. Now let's talk dividends. Pfizer pays $1.72 per share annually, which translates to a juicy 6.55% dividend yield. The company has increased its dividend for 14 straight years, but the payout ratio is 121, 82%, which seems a bit high and potentially unsustainable. Buyback yield is 0.16%, and total shareholder yield, including dividends, is 6.71%. So what's the verdict? Pfizer isn't a flashy tech stock, but for investors seeking stable returns, strong dividends, and a globally recognized brand with innovation still in its DNA, Pfizer could be a worthy pick. Would you buy, hold, or skip Pfizer? Let me know in the comments. If you enjoyed this stock analysis, don't forget to like the video, subscribe to the channel, and hit the bell icon, so you never miss the real story behind any stock. I'll see you in the next video. Until then, happy investing.